Hey traders, if you thought this week in the market was crazy, wait till you see what unfolds next week. And in this week's session of Trade Your Way to Freedom, I'm revealing projections on where this market could go. Plus, I don't know about you, when I first started trading, I was just plagued with indecision, didn't have a great strategy to use or system, and I was scared out of my mind and missed so many great winning opportunities. If that sounds like you definitely want to watch today's session all the way to the end because I'm revealing what you can do to fix it. So, two great stocks, great analysis of the indexes, and swing trade secrets that'll help you to become a better trader. So let's jump into today's session right now. And so, okay, well, good afternoon, everybody. If you're like me, or starting out trading like I did, a couple of things that I've just found really, really frustrating. And that was one, my indecision. I didn't know, I knew just enough to be dangerous in the trading world. And the other thing I was doing is wasn't trading a proven strategy or system, and the fear of missing out when I would get into a trade or miss getting into a trade was just really frustrating and almost sometimes would make me almost angry. And it just really bugged me and almost haunted me, this aspect of the fear of missing out and second guessing myself. And a lot of that had to do with just I didn't have an organized strategy and system to be able to utilize. Anil, can you relate with some of those thoughts and feelings when you were first getting started?
Not only first getting started, I still have problem with that.
Okay. And so,
and because I perfected my system in the last 2 years or so.
Right.
And it's giving very reliable signals.
Right.
In hindsight. Because here was a reliable signal. Why didn't I act?
And so, I know you were talking about that a little bit last week, and I hope that you've been able to hammer down some of those items and to be able to.
Still working on it.
And so, because here's the exciting part, and I think that's one of the reasons why Anil and I both want to be involved with this Friday webinar of Trading Your Way to Freedom. For me, my indecision weighed me down so much, and my self-doubt. I would have, the old analysis by paralysis by analysis syndrome, which is, again, very frustrating, and especially coming from a technical background and as an engineer. I slowly built my way up and worked through a lot of the issues to be able to come up with my trading system. And the autopilot trading system, what it is, and I don't know if I've shared this with you and Neil, what I did was I went back, I wanted to have a swing trading system, and I went and I cherry picked what I felt was the best pieces and parts of the swing trading systems that were available at the time. Like from Investor Business Daily, what did I pick? I picked the stocks. In other words, Investor Business Daily, as far as I'm concerned, does the best job of establishing the fundamental values of the stocks. And so that's what I picked from that. From somebody else, I picked up the concept of how to utilize the moving averages. From John Carter, I picked up some of the thing with some of the indicators. And then a couple of things I picked up along the way with the Bay Area money makers and the members of that, until I came and I then condensed and boiled that down into what has become the autopilot trading service, which I'm very pleased with. And so I want to welcome everybody here today. Here's what we're going to be taking a look at. But if you can relate with those things, give me a thumbs up or give me just a comment over in the chat box. If you're joining us over on the YouTube channel, welcome aboard. And just let us know who's over there if anybody is watching over there. But if you can relate with that, just leave a little comment saying, I can definitely relate with that. I'd really appreciate it. So here's what we're going to be doing today, taking a look at provide focus on developing a consistently profitable mindset, which is very, very critical and important. And then finally, provide a clear and simple trading tips. That's one of the trading tip today is really at fabulous. And also the stocks that we're picking, both Anil and I have picked out really excellent opportunities for this coming week. So as Ed says here, the thing about successful trading is it requires a consistent routine and the discipline to stick to it regardless of the market conditions. And our crazy market conditions, as you've seen over the last couple of days, the last couple of weeks, and maybe primarily the whole year, the market conditions have been very, very challenging. A little less challenging in 2022 when we were in a huge bear market. But Anil, what's been your biggest challenge this, you talked about the triple screen system with 2020 hindsight saying, yeah, I should have entered here, entered there. But besides that, what would be one of the biggest challenges that you've had so far in 2023?
I'm trying to follow Mark Minervini more and more.
Okay.
And I'm trying to understand his system a little more. And that's a little bit challenging because there are some key differences, but hey, he's the champion.
Yeah.
So I'm trying to combine his with mine.
And what's one of the biggest things you found of Mark's that attracts you to the way he trades?
He goes for the trending stocks.
Right on. Yeah.
And to my surprise, comp rating was not one of his factors, even though he looks at it.
Right.
If you look at his page, his 5-month trending stocks, comp rating is just simply not there.
That's interesting. And I think you and I are kind of discovering some of the same things, because comp rating is one of those things that, you even said yourself, is that when you get your signals, sometimes the comp rating may not be very good. Every week I'm going to be providing this. It's called Swing Trade Secrets, because I am a swing trader. And one of the ones we're going to talk about today is just unclear trading strategy. Part of that has to do with, one, how do you fix it? Well, one, have and develop a concrete trading plan. I encourage folks, if they don't have a trading plan, just reach out to me and we'll get you set up with my rules on one page, which is a skeleton for a trading plan. So you don't have to start from scratch. And then one of the other things is integrate your strategy with your trading system. They have to complement each other, because if either of those two components of your trading plan are not in sync and or are weak, you will struggle with the trades that you're doing. Secondly, use a proven trading routine. Our precision entry point trading routine is a great way to get started with that, and you can find that over on my website. And go check that out, and I'll leave a link down in the description on the YouTube channel. And then back test and validate your strategy and your system. And I think that's one of the biggest things that I think will help you become a more confident trader is invest, I would say, 20 minutes a day, going back, looking at old charts, and or utilize the on-demand feature of the Thinkorswim platform, and work through your system saying, okay, here's my trigger. I would have taken this trade. Here's my trigger. I would have taken this trade. And then see how it does, because that it helps validate, but also helps develop what they call muscle memory in Sparks jargon, of rehearsing, and see it in your mind. And that way, when you see it live or you see it, on a chart that you want to take a real action on, you've already been there and established that as a process. Use a risk management system, which gets back what's interesting on several of these items that are causing people to lose money. That comes out, number 5 comes out as a major objective or major action to do, is use a risk management plan, which is quote unquote secret talk for learn how to use stop losses. And so I think that is one last one. Practice, patience, and discipline. Those remain the same. I pulled over from last week's list, but they're still applicable to this. And so, Anil, what would you add to this list?
Well, the list looks pretty good to me. Right now, I got nothing to add.
And anybody out there would like to add anything to it, just drop it down in the chat box, which reminds me of something that I'm really, I've been reading the book by James Clear on the atomic habits, and he talks about just taking a little bit at a time, bite off a little bit at a time, get really good at that one thing, and then grow into the next thing. One of the things that I've noticed, some quotes coming out this week, that if you will invest 18 minutes per day on improving a certain aspect of, whatever you're doing, it may be trading, it may be it may be given public speaking, whatever, but 18 minutes a day, focus on that. And that multiplies out to about 100 hours per year. At the end of that year time period, that investment in time will basically make you more proficient at whatever that task is than 95% of the people that are out there, which that gives me a lot of encouragement to continue, sharpening the saw that I utilize to trade with. Hey, just a real quick reminder that if you need a journal, my son wrote this journal, Brandon Wilborn wrote this journal. It's one of the best-selling ones over on Amazon. So it has basically people who journal tend to be more successful and more profitable traders. I'll put the link on the description so you can take a look at it. It comes in two different sizes. One's a little small size. The other one is 8.5 by 11 size, and 160 pages, includes rules, includes just the complete way you can graph out what you're doing with your trades. So that brings us to our time for our market analysis. This week has been an exceptional week for us with Autopilot, Anil. We had multiple fills off of our pre-flight checklist. The other thing is the multiple fills. Then we had follow through with those trades, and it's jumped us up to about 18% for the year so far. So we're pushing that towards that 20%. And as you can see, the P&L working the way it's supposed to, ups and downs, ebbs and flows. And I would like to get it. I would prefer getting it above the 40% line and let it bounce off that on the way up. But really pleased with that. So here's where we sat last week, and here's where we sat this week. Like I said, a little bit over 18%. Note here that all the indexes, with the exception of the Russell, are out of bear territory, but the Russell is still plodding its way, trying to get out of it, but it hasn't got out of it yet. And I'm going to be saving the best towards the end, Anil, which is our stock picks. Folks, if you're waiting for that, just hang on. It's going to be, again, these stock picks are going to blow you away. So let's take a look at the indexes. Let's start here with the spiders. A couple things I want to be looking at with the spiders is we have price action pushing up towards the upper zone here that we've identified, and goes back to this high that was back in around the August timeframe of last year, right there, that high right there. There is a zone of resistance there that we are finally getting up to and hitting against. But there's a couple of things that are going to be, at least until it breaks out of there, that are going to be basically providing resistance to push things down. One, TSI, weekly chart, up in the upper reversal zone. TSI, daily chart, up in the upper reversal zone. And so that momentum cycle looks like it's ready to roll over, hasn't done it yet. And then the type of candlestick it is on today's, right now, we have not closed out, but we're getting a spinning top doji, which is a candlestick of indecision at a significant level of resistance. And so prices could, in fact, just kind of flop around here, stall out, pull back, and drop very rapidly. Good signs. One, price actions is above all the major moving averages. There's the 200, the 100, the 50, the 34, the 20, and the 8-day moving average. And so once you get price actions above those moving averages, look for it to bounce in here and move back up. You can use those moving averages as a level of dynamic support to move for prices to pull back into and then bounce higher from there. So that's what we've got with the S&P, that as represented by the spiders. The NASDAQ is represented by the Qs. Couple of interesting things here is while price actions have broken out of the resistance area here and gone on to new high, how far did they go? That's a great question. And if you are a Fibonacci person, what you'll notice is I did a Fibonacci from this high here to this low here, and let that be the projection. We got the breakout. Normally, where things will start slowing down is at the 1272, and that's exactly what's happening with those candlesticks right there. What kind of candlesticks are those? Well, those are hanging men, and a weekly hanging man is in fact a hanging man after an uptrend is a bearish reversal signal. Now, as you see, it passed and took out the high from last week's hanging man, so it voids last week's, but replaces it with a hanging man bearish reversal signal on this week. TSI, way overextended. And then look at the RSI here. The RSI has gotten up in the upper reversal zone, and it looks like it's time to roll back over. On the daily chart, what's interesting is on the RSI, it actually we have a negative divergence on it, and we have negative divergence on the TSI as prices are pushing on up to make a new high. But what kind of a candlestick is it putting in? A spinning top doji, and price action here came in here and sold, and so it's having a struggle getting through that level there. Just happens to correspond with the 1272 extension, which is an upside target for the Fibonacci extensions. And so could it break through and proceed on up? Sure, it could. If it breaks through and proceeds on up, keep your eye on the 1618 Fibonacci extension is the next area where it could run into resistance and cause stalling. I'm using the stalling as a aviation term. When an aircraft is climbing, runs out of momentum, it stalls and falls back to the ground. Not down to the ground necessarily, but it falls and falls back. Where do I expect? Do I expect us to crash and go down to these lows over here? Heavens no. I expect it to pull back into either the uptrend lines, the breakout area, and that would give us a chance to potentially load up on some additional, give us the opportunity to load up on some Russell and some NASDAQ stock or TQQ. Russell, I mean, you can't make this stuff up, folks, is look what happens with the Russell. One, we already had this downtrend line in place. That was where it bounced last time. And those of you who were in on our premium training this past week, I was talking about target shooting and how to do it, is you look for these areas these confluences of influence where you're getting a push up into past resistance, but also resistance from a dynamic stance, which is the downtrend line here. And as you can see, what happened with the Russell on the weekly chart, well, we push right up, stop, dead in the water, and is selling off. Same thing on the daily chart. On the Russell, we have a bearish Harami. We break this low right here. We're probably going to pull back here to the 200-day moving average. Watch the TSI. If that breaks down, I would anticipate it moving at least down to the 0 line and then do a rebound, and that may put us down. Watch your price action at the same time and that could put us there. And the numbers on that is a pullback. I would say look for a pullback anywhere from the 182 level all the way down to approximately, let's say the 180 level, somewhere in that range. So as we move into next week, because it's the Fed week, watch for the markets to be just a little bit wonky or flaky going into the Fed. Right now, we're getting some mixed signals. Some people are saying the Fed rate, potential Fed rate, is sitting at 70% probability of happening. However, I looked this up, and unless I have found the wrong thing, is the Fed rate is sitting at about 73% that it will remain unchanged. And if that happens, if it does remain unchanged, watch for the market to continue to rally from where it's at. On the flip side of that, because Forbes magazine came out and said it was 70% chance that it was going to be hiked by 0.25 basis points, 25 basis points, and 70% chance of that happening. But I'm looking at this and saying, okay, if they hike the rates, we're probably going to get a sell-off. And the other thing I'm looking at is, of course, the percentage of stocks above the 20-day moving average. Note, it's up here in the upper zone where it tends to reverse and pull down. And again, that cycle that's a cycle of momentum, and the cycle looks like it's ready to do a little bit of a pullback. So, Anil, I'm sorry for such a long level of covering, what's going on with the indexes. Anything you'd like to add? Okay.
Good. Excellent.
Okay. Well, let's take a look at our stocks. And your stock for this week is Salesforce. I really like this stock. Now, if I heard you correctly, you said you bought this back on the 2nd.
Yes.
Okay, right here.
And I might even buy some more. It took a big pullback a couple of days ago.
Yes, it did. Actually, I was in this stock. We got into it here on the 6th, and unfortunately, I had a really tight stop on it. Came down, took us out on the 7th for not even a 3% stop loss on it. But then it responded back here. So yeah, it's a little bit wonky. So
I think that my challenge comes in on a stock like this. My system shows a weekly signal is on since January the 30th.
Okay.
And that signal still has not gone away.
Okay.
So how do we handle that, and the nasty stuff that it did recently? That becomes a challenge sometime.
Yeah. One of the things that I do in a situation like that is I take a look at the weekly charts, but I look at how's it respecting that purple moving average there, which is the 8-week moving average, which corresponds approximately to the 50-day moving average. So it's a little bit, out of kilter. But I just take a look at that and ask myself, okay, which moving average is it respecting? And as you can see, right now it is respecting, about that 205 level. And so I would redraw my trend line here and just pull it down to that low there. And if I was looking to add to my position, I would just be looking at somewhere between the 8 and the 20-day moving average, with an alert probably at about the midsection of today's candlestick. But it's looking good. I mean,
yeah,
the cycle momentum has shifted back up to the upside, so that's looking really excellent. So, okay, now, and it also has lots of room to run, 20-30% if it continues on its way up. So great looking stock.
Look at monthly for a second if you can.
I can do that. I have the technology and the training. There you go. Yeah.
And the monthly just gave a buy signal on my system.
Okay.
MACD is just turning around and it's looking great on monthly.
Okay. Yeah. I mean, that like you said, it is just heading on up. It's like I said, if you were to buy it here, even if you bought it right here, again, I'm a pullback guy, but you could buy this right here. And if you did, below the swing lows is still less than 5% stop loss.
Yep.
So that's excellent. So let's go back. I'm going to leave that up. Here is my stock. This stock, okay, folks, I am doing a pure swing trade type of opportunity here. I highlighted this to our members, our premium members last week, and this is MARA, which is Marathon Digital. What's going on. Coinbase got ripped, slapped in the face this week by the SEC or SEC. And the Fed is going to come out, or the government's going to come out with U.S. digital, money, if you will. Some of the reading I had done is that the part of the reason why the Fed is going after, the government is going after the crypto and the Coinbase companies is because they want to corner the market now in digital currency. Could that be the case? I don't know. But with a pure swing trade type of situation, you look for something setting up like this. And this was an absolutely awesome one, because on Monday, I suggested to our premium members saying, hey, if price action pulled back down here into the $8.65 level, that would be a great place to buy. You would put a stop loss just slightly below this low here. 10, 15, 20 cents or so, make sure it's less than 50%. And sure enough, the next day it comes down, hits it, and runs 15% in the first day. Okay, from the time it was set. The next day it bounces up, hits the downtrend line, but also hits the upper level of that, which I'm putting at about $10.25. And so my trade, Anil, on this one, it has a accumulation distribution of a B plus 96 on the relative strength. Its comp rating is a 50, which is not good. And its up down ratio is 1.8. But as long as it's stuck in this channel, I can lay in I currently have a order out for my own account to buy some at $8.65 with a stop loss at $8 and approximately 34 cents. And so that keeps me within my 5%. My profit target is up here at the 825 level or 820 level, somewhere in there. And that is all done automatically, and it's a fire and forget kind of trade for us that will stay in place until it's either filled. And so that's my trade for this coming week.
Wow, that's neat.
To give you an idea, folks, of what this means is, okay, if I can go here from where I've drawn in my support at the 864 level, and if it runs all the way back up to the 1025 level, that's 15.56%. And if I can get, heavens, 13, 14%. And so, yeah, Dan, my profit target on this one will be at $10.25 or $10.20, somewhere in here. My entry trigger, and I do this all with a conditional order through Thinkorswim. My entry trigger is down here at $8.65. That's my trigger to get in. And if I said 825, I was mistaken. The thing I like about this particular type of trade, Anil, is it's done, it has done this little round trip, 1, 2, 3, but it's done this 4 different times, and a 15% times 4 times since late April. And when you find one of these, just, write it until it stops doing what it's going to do, and it'll help put some money in your pocket. But don't try to finesse it. Don't try to dance with it. Just basically, it is literally a get in at this point. I'm going to get out at this point. This is not one where I just, split up my profits that I'll take 10%, partial profits at 10%, 15%, and 20%. No. Based on the personality of this stock right now, I want to get in, full get in and full get out conditionally, and then basically walk away and then reload the order to do it again and again and again until it stops doing it. And so, all right. Well, Anil, I think that brings us to the end of the day. I'm sorry for running a little bit over, but I think we got some good stuff covered. And so you like that kind of concept with the Mara trade?
Yeah, and I was looking at on my system on April the 10th. Actually, it got a weekly buy signal that has not gone away. And just holding it. It may be ready to shoot upward.
Yeah, that would be wild. I mean, so okay, guys. Hey, just want to welcome you guys and thanks for joining us today. 2023, the breakthroughs continue to happen, and we're just working on consistent trading success for everybody. Neil, thanks for joining us today. I'm looking forward to the neuro-associated
you got it.
Conditioning coming up towards the end of July, folks. So stand by for that. Have a great rest of your week, and we'll look forward to seeing you next week. So aloha. God bless everybody.
Bye now.